It is a big week for the industrial names, which I know you like as well, or have liked historically as well. What are you watching for?
Yeah, no, it's a great question. There's so many data points that we're gonna learn this week, and it's 25% of the S&P companies that are reporting, to your point. So the first thing I'm looking at is, I know everybody's watching Apple and Tesla and Facebook and Lam Research. I am too. And by the way, I do think the Apple report is probably the most important. It is a 700 basis point weighting in my benchmark. Right? And so I'm anxious to hear about the 80% of the products and services that they have refreshed over the last 12 months and what kind of momentum that's going to take us in the next 12 months, the next couple of years. So it's going to be an important one. But back to your question on the industrials, we're going to hear from, I wasn't skirting the question. Freeport-McMoRan, for sure, is an important one tomorrow, because we will hear, and it trades like China. We want to hear about the global recovery. Caterpillar, the same deal. Dow Chemical, they've done a great job at cost cutting. Are they getting pricing power? So all of these industrial companies are important. But of course, you know, my largest position is Boeing, and that one is also going to be extremely important. And GE will tie into that, right, in terms of the aviation division. And both stocks have had a really nice recovery off the lows and into the beginning parts of this year. So it'll be interesting to see the reactions. And then the other thing I'm looking at is really the consumer globally. American Express and MasterCard report this week. And we know that the consumer spend has been kind of disappointing for card spend anyway, especially for American Express. It's in a recovery mode. These are reopen names. So I want to hear what they have to say about the global consumer. So those are the two segments this week that are going to be very, very important to watch, and certainly on my radar screen. You know,
we started this hour talking about valuations, and I wonder how you see it, given the fact that we are really getting underway with this earnings season right now. And one of the things we've seen the last several quarters is that the estimates were so much lower than the numbers that actually came in.
Look, I mean, there are pockets of this market that are very, very rich, right? And mainly in the technology segment, quite frankly. That's what happens when you have an enormous amount of liquidity and low interest rates, right? That's fuel for the risk-on trade, which means equities, right? So I think you have to look at it like some of the technology companies have done so well because their growth end markets are so bold, right? I mean, you look at AI and you look at cloud, $1 trillion total addressable market by the end of the decade. Food delivery is going to be a $400 billion market, total addressable market, by 2025. Precision farming, right up your alley, is a $70 billion total addressable market. So I understand why technology has done so well, because the growth is there, the free cash flow is there, the market share numbers are there. So you definitely want to have some exposure, especially because we as the consumers, we understand these businesses. It's like the Peter Lynch way of investing. At the flip side, the parts of the market that are not expensive are the cyclicals, are the industrials, right? They're the economically sensitive companies. And I want to own them mainly because I think the economy is in the recovery mode. The Atlanta Fed, by the way, has a GDP number for the fourth quarter at 7.5% annualized. That's a huge number, and I think that will surprise people. And I think as you go through the year, you're going to have all this liquidity that funnels into the system at low rates, even if they inch up higher. That's still very, very positive for GDP growth, earnings growth, and operating leverage, especially for the economically sensitive companies. So pick your spots.
Shepard Smith here. Thanks for watching CNBC on YouTube.